Let's talk about short-term disability insurance and why it's such an important employee benefit. Even though you are covered for on-the-job accidents through workers' compensation, you are not protected from off-the-job sicknesses or accidents. Short-term disability is an insurance plan that is designed to replace a portion of your paycheck if you are unable to work due to an off-the-job sickness or accident. If you are unable to work, then you are unable to collect a paycheck. While your paycheck stops since you can't work, your financial responsibilities don't. You still have to pay for things like a car payment, mortgage or rent, bills and utilities, other insurance policies like medical insurance, car insurance, homeowners or renters insurance. How about the medical bills due to your disability? And if you're pregnant, new babies aren't cheap either. Do you know how many diapers they burn through? The point is that you need money more than ever when a disability keeps you from being able to work. That is what this insurance is for. It protects your paycheck, and it's one of the most important insurance plans you can purchase. Examples of common short-term disability claims might be back issues, knee disorders, accidents or surgeries that lay you up, and sicknesses such as cancer, strokes, mental illness, or heart attacks. While you may consider a pregnancy to be an accident, it's actually covered under short-term disability as a sickness. Now let's talk about the fine points of how the coverage works. The typical STD plan replaces up to 50% or 60% of your pre-disability earnings. Should you incur a disability while covered under this plan, the process begins by filing a claim. You provide information as well as your personal doctor and your employer. The insurance company then reviews all of the submitted documentation, and upon approval of the claim paperwork, the policy begins to pay you money. With these types of plans, the policy will begin payments to you after a certain number of days following the disability. You will then be able to collect for a certain number of weeks, perhaps 13 weeks or 26 weeks, depending upon your company's specific plan design. There are some key details that you should also pay attention to that will be provided to you separately. For instance, whether or not the benefits received under the plan are considered taxable income, or whether or not the plan has a pre-existing condition exclusion. Hopefully, this brief overview of short-term disability coverage helps you better understand this important employee benefit.